I think that's the headline I'm definitely going to remember, since everyone's got themselves in a bunch over tariffs. But focus on Dixon Tech. Dixon Tech has forayed into display fabrication segment with a total capex of $2.7 billion. We'll be joined by the management shortly to talk about their plans and more. But first, Puneet is setting up the conversation for us.
Thanks for that. So it's a very big venture that Dixon Tech, India's largest EMS company, is venturing into. And while the stock price performance might have impacted after Q3 earnings, based on the large amount of capex, I think the market as well as brokerages and analysts are warming up to the idea and seeing this as the next big play for Dixon Tech, something that they've not refrained to from getting into a tough industry, but they're looking at the long term. That's what brokerages are saying. But one of the key aspects of this big investment is, of course, the government subsidy. Under the India Semiconductor Mission, it is expected to subsidize roughly 75% of the total project cost, 50% from the center, 25% from the states. And with this, most brokerages are building in a very positive outlook for Dixon Tech. Some brokerages, like the Kotak as well as Investec, have reaffirmed their positive view on this venture after the Q3 valuation re-rating as well as fall. And one key aspect that they are saying, that by FY31, Dixon will have EBITDA of 2,000 crores from this new venture, something that they're going to do in FY26 from the current business. So it's essentially a new business created in the next 5 to 6 years. And it'll be key to see if management might affirm that number. But it's a new venture that's going to be, drive the valuation as well as stock performance going forward as well.
Well, Puneet, thanks for that. And let's pose some of those questions to Saurabh Gupta, CFO of Dixon Technologies, joins us right now on the show. Saurabh, great having you. Thanks for taking the time out. And one of the notes, Saurabh, that I read on this display, let me start off with that micro, right? The display fabrication entry. It says, bold ambition, high stakes. Tell us how you think about it.
Yeah, absolutely. We also feel it's a large kind of commitment that Dixon is giving. Dixon would be doing. We have historically not done that kind of capex, but we feel it's very important for us for the next 3-4 years, because we already have a large opportunity in mobiles, IT hardware, and also in TVs, and at some point of time automotive displays as well. And we think that getting into display would add another revenue stream. It's a highly profitable business, and there is a duty arbitrage to it. And since we already have a large customer base, and with a decent government policy with 75% of the capex being subsidized, I think so we can generate decent paybacks, less than 3-year paybacks, and also good ROCs in this business. So it will not be ROC dilutive for us, and it can in fact be positive for us.
Saurabh, one of the views that comes, and I would love to understand how you think about it, is that because there is fair degree of technology disruption, heightened competitive pressures from one country, and therefore for any player, not just you, there might be continued government subsidies as well as trade barriers which might be required for any business doing this to start off and thrive. Do you believe that to be the case, that will be necessary? And if so, do you reckon that you can bank upon it?
Yeah, for display fab, I think so government support is required, and that is not only the case in India. Globally also, if you look at any large semiconductor capacities or display capacities, a large amount of that is supported by the government, either in form of equity participation or subsidy, or some kind of a subsidy which is the current existing government in India also trying to do. So we feel it's a large opportunity because India imports almost 11 billion worth of displays now. And that number is expected to go to 23 billion. And display and semiconductors both are very critical component which goes into any electronic product. And so it's very important that only when the government comes out with the ISM2 plan, then only we'll go ahead with this project. But apart from that, I think so in other categories where we are already beneficiary of PLI, I think so there we now no more require government kind of support. In mobiles, we have come to a position where we have a large scale. We are now looking to get into backward integration. We have a decent manufacturing cost. And there, the initial support provided by the government has really helped us. But now I think so we can really stand on our own feet and compete globally.
Saurabh, hi, good morning. Tamanna here. I just want to go back to the point about what is expected under the ISM scheme. This display unit is under the ISM scheme, as you explained. What is it dependent on? What is the kind of intake or support that you need from the government and the conditionality of that? If you can give us some idea there.
So broadly, there are three policies of the government, and I'll come specifically on ISM. So one is the production link incentive scheme, where we are already beneficiary of across five categories of ours. Second is a component PLI scheme, which is expected to be announced anytime before this end of this financial year. And third is the ISM-2. ISM is basically the Indian Semiconductor Mission, which is majorly targeting towards semiconductors and displays. The first scheme was basically the beneficiaries were Tata, the CG Group, and we understand that the government is planning to roll out another ISM-2. Only when they roll out, then we do definitely decide to go ahead with this display fab. But as far as our existing component play is concerned, we are definitely getting into the display assembly of mobile phones, IT hardware, and also looking to get into the camera modules.
Just to reiterate, this $2.7 billion capex is contingent on the rollout of this government scheme and clarity of what is the extent of subsidy that is coming from the government, correct?
Absolutely. Okay. I think so 75% needs to be subsidized.
75%?
Yeah, so 50%, the way it happens, the 50% is generally given on a pari passu basis by the central government, and the state government generally gives around 25%, whichever state you plan to set those capacities. So balance is 25%, and within that 25%, we feel our equity partner should also bring in around 25-26% of equity. So our outflow effectively will be only 75% of that 25%. So it will be a not that large outflow, and we feel confident that it is a project which will be.
What's the figure, Saurabh? You know, that mental math I'm not able to do at the rate you've done.
So
what's the figure you've pegged in?
Yeah, so 3 billion, suppose 3 billion is the total capex. 75% subsidized both by central and state governments. So we are talking about $100 million, which is 25, probably somewhere around $800 million. In $800 million, 26% comes from the equity partner. So we are talking about effectively $600 million, which has to be done over a period of 3 years by us.
Okay.
And we generate, the maths is very good. We can generate decent revenues and EBITDAs of almost 20% of the business.
Okay. So $600 million. And that makes sense because the display space is a low growth, high disruption and high tech change space, isn't it? With quite a bit of competition from China.
Yeah, absolutely. But I think so India has an advantage because there is 11% duty arbitrage rate. And you already have a large customer base. So the overall cost of manufacturing, cost of capital comes down. And it adds another revenue stream and adds to our profitability and after a period of 3 years. So clearly, we think we will definitely make a strong attempt to get into this. But yeah, of course, we'll wait for the guidelines from the government on that.
One more question on this. Lest this sound like a display-only conversation, it's not. But just one more conversation or question on this. Because India is such a large consumer market itself, right? And with all the duties, etc., and support that you spoke about, do you believe that there is... I mean, you would have a right to win into almost anything that you enter into because of your size. But I'm just wondering, with the existing players out there in this market, do you believe that there is a market to be captured from others because of the fact that you are a large manufacturer, you are based in the country which is consuming large amounts of these products? Is there a right to win out there ready from day one?
Yeah, we believe strongly because we have a large infrastructure, a good team, a strong balance sheet, and clearly we are investing a lot, whether it's digitization, backward integration. So we think, of course, there's an opportunity for everybody to grow. India's share in global EMS space is just 3 to 4%, and it is expected to go into high double digits with the kind of policy framework the government is having. So we feel that we will be a large beneficiary, but of course, there will be other players who will also be committing investments in this category. But it is good for the overall, I would say, for the country, for India, for the industry. More players come in this category of components and overall electronic products.
Okay. Saurabh, what else? I mean, in terms of, we're trying to think of this at the start of the quarter, that maybe towards the end of March or mid-March, we'll ask companies about how is it that growth has looked like in the quarter gone by. Maybe not as much in your space, but in other pockets as well. But just wanted to understand, we are virtually mid-March right now. How have things been We saw a bit of growth coming back in quarter 3, which is the October to December quarter, relative to quarter 2. Have things looked like picking up further to your mind for your business and for businesses at large?
Yeah, so I said the initial part of the starting of the quarter, the demand was slightly slower, but lately we are seeing some uptake in consumption, especially the rural demand. And clearly the government policies also, they have kind of relaxed those weightages on bank financing or NBFC. This is a large part of the consumer financing. So that is a positive. So overall sentiment is turning slightly positive, I would say. But in our case, I think so. What our growth would be decent because because we have been continuously taking higher share of wallet from existing customers and also continuously adding more customers. And so it has been a mixed bag for us. So something like variables, telecom has done really well. Mobiles is kind of okay. And TV and lighting is slightly slower. So it has been a mixed bag, I would say, for us. But still, we have 15, 16 days to go in this quarter. So let's see.
You know, I'm just wondering, Saurabh, for the business, is there any exposure to imports that could be impacted by tariffs? Or reciprocal tariffs could be one end of it between India and the United States. A global tariff war could push up your component costs. I'm sure there's a conversation internally and a back of the envelope calculation. Is there anything that you can share with us?
So we feel, of course, negotiations are going on, and the government is also we are in discussions with the government as well. We feel, though the contours are still not out, negotiations still going on, but we feel it will be positive for India. Because if you look at India's export of electronic products to US is just 2 to 3%, while China is around 35%, Mexico is around 43%. So they are large, they have a large share. And clearly in both the countries, the tariffs have been levied to the extent of 20%, which is almost negligible. So we feel that India is at a slightly competitive advantage. Now, if you look at the reciprocal tariff, the way it works is that either you can put the same tariff on the same product, or you put a weighted average tariff across basket of products. Now, the import and export basket across US with US can be different. So we feel that the weighted average tariffs for electronic products for India is a lower number. So though mobiles can be a 15% overall, but since a lot of components are lower, sub-assemblies of components are lower, IT hardware comes at a 0% import duty. So weighted average tariff is still 3 to 4%. So if the government, if this negotiation goes in terms of weighted average tariff, we will gain significantly. And if it goes in favor of, say, zero duty on US kind of import on, say, smartphones, which is the largest export from India, then also we feel that as far as manufacturing in US is concerned, it looks slightly difficult. Reason being, of course, one, it's a low value addition product for them. Secondly, the wage rate differential is almost 10x. And third is the strengthening of the US dollar, which of course makes the manufacturing in US more expensive. So overall, considering all the parameters, whether it's tariffs on a neighboring country, whether US can manufacture smartphones, and if you even offer a zero duty to them, in all these respects, I think so India should gain. Yeah, but one has to wait and watch and see what happens in the next 15, 16 days, whenever April 2nd we are talking about. Yeah.
Okay, thank you so much, Saurabh Gupta there of Dixon Tech. This display, business component has been rated as one which could bring in as much as EMS. The only thing to remember is that it's contingent on the ISM policy. That's the Indian semiconductor manufacturing policy that the government is expected to roll out. 75% of this is expected to be subsidized by government. So important details coming out of that conversation. The Dixon stock under a bit of pressure today. We'll take a very short break, but on